Good afternoon to our CLA family members, clients, community partners, and friends. Welcome back to our live stream. We are thrilled today to welcome Chastity Wilson with our National Tax Office. She is going to provide updates today and clarity related to payroll tax deferrals and credits. And she also has an IRS background and has some awesome insights into what is going on with the IRS. So welcome, Chastity. We also have our good friend Jack Rybicki back with us today to give us some timely PPP updates. So welcome, friends.
Hi, Leslie.
Before we dive in today, I do want to cover a couple housekeeping topics. We are still monitoring our live stream at claconnect.com inbox. So please feel free to continue to send us questions and comments. We will address what we can while we are live with you on our show today, and we'll respond to those that we don't as quickly as we are able to. And again, as a reminder, you can always find more information from us on our COVID landing page at claconnect.com and use the Contact Us button for more specific consultation. I also wanted to just spend a quick second talking about a series that we've got coming up that's going to take a deeper dive into some of the topics that we've been covering on the live stream series. That session is going to be a 5-part series that's called Unlocking Cash During COVID. This series starts next Wednesday and is really focused on how you're going to raise cash and save tax dollars over the next 5 weeks. That session is going to kick off with payroll credits and payroll deferrals with Jen Rowan, Chastity, and Scott Hess. And then it's going to continue on with several related cash savings topics, including how to save on utilities and sales tax, tax savings related to research and development and capital expenditures, cash savings on telecom spend, and it will close with a culmination of all of the year-end tax planning ideas that you can consider as we move into the fall timeline and the year-end tax planning sessions that we're going to have going on. So it's going to be a really awesome series. We really encourage you to go to our COVID landing page and register for that session. So with that, I want to dive into our session now. And again, welcome Chastity to the show. We're thrilled to have you.
Thanks, Leslie. It's always great to be here with you and talk to the audience about current issues.
So Chastity, last week we started to get some questions in the live stream inbox related to the IRS, and we've got a lot of people that I think are receiving notices from the IRS saying that they've got balance due, despite the fact that they sent in payments via mail. In fact, I was corresponding just yet this morning with a client on this topic. So can you tell us what in the world is going on here?
Yeah, I'm not surprised you got a lot of questions because my inbox has been blowing up with the same question. So to really understand what's going on with these IRS notices, we have to talk about, and we have on this live stream before, what happened to the IRS. The IRS service centers were closed for several weeks. In my entire career, which I've pretty much touched the IRS at one point or another throughout my entire career, I've never seen them shut down for this extended period of time. And so what happened was mail wasn't processed. And, you know, we later learned some of those stories you heard about mail sitting in trucks was true. And the IRS has come out and said they at one point probably had 12 million pieces of mail that was not processed. So what you're seeing is these notices are being issued because returns were probably filed electronically, but maybe a payment was sent in through the mail. That payment's still sitting there, being waited, you know, being in the backlog to be processed. So these notices are computer generated. So that's one of the misconceptions is people think somebody's going through their account and saying, oh, they owe money, here's a notice. These are computer generated. So the computer's looking for that payment, doesn't see it, but sees the return. So it automatically generates this notice. And so that's what we're seeing, these balance due notices, and just a tremendous amount of them. And last week I was fortunate enough to be on the phone with some IRS employees, and they acknowledged the issue and said on Friday they would be posting their website some more information, which they did. They did post more information on their website. And what I can tell you is the common question we get around this notice is, can't stop my payment, right? Mm-hmm. Because maybe I mailed, some of these payments were mailed all the way back in March and they're still not processed. Yeah. And the IRS says, no, do not stop your payment. It says, we will process the payment as of the date we received it. I reasonably believe that means they're going to be looking at the postmark date, and that will avoid any penalties or interest being generated, because they acknowledge on there it's not going to be the date we actually processed the check, but the date we had received it. And they say, don't stop your payment, because potentially that could generate penalties and interest, because you stop the payment, then make the payment after the due date, that may generate interest and penalties.
So that's really helpful. And I do know a lot of people also, are asking, well, I want to call the IRS. I want to confirm with that. Should I call in and should I ask them anything about canceling the payment? So what are we saying to the clients about whether or not we should call them, or anything else we should provide insights on?
Yeah, Leslie, that's a great point. And what I heard through, not a source I could cite here, but what I have heard is the calls have most of the phone lines you can't even get through now, because there's so many people calling about these notices. I'm going to say, consistent with what the IRS is saying on their website, you need to be patient, because quite honestly, when you call, if the check has not been processed, that assister, all they're going to be able to tell you is, we're working on it. We're working on our backlog. Once it's processed, it will post. So they're going to tell you the same thing that you're seeing on the website. So our recommendation to our clients is just hold on for 2 to 3, 4 weeks, and it should resolve itself. Leslie, this is, not something that you and I prep for, but I do want to tell you, yesterday, Richard Neal, the chairman of the Ways and Means Committee, released a letter to the IRS urging the IRS to stop these notices until they're back to pre-pandemic times. And so we're hoping, I'm on various committees, and we're hoping through advocacy that the IRS will listen. And what they'll do is stop these computer generated notices until they're caught up. So we can cross our fingers and hope, because we know it doesn't, getting a letter from the IRS, even somebody like me who's worked for the IRS and involved with the IRS, is still nerve-wracking. So hopefully they'll listen to all these advocacy measures.
Well, I think that's really helpful. And I think if you get a notice, if in doubt at all, certainly contact us, contact your CLA professional. We're happy to help you navigate this, because as Chastity said, we know it's scary. We know it can be uncharted territory and waters for you. And a lot of times we're going to help you take a deep breath. We're going to help you navigate it, but certainly give us a call. So with that, let's pivot now our discussion to payroll tax deferral, which this has been another topic of just utter chaos because of the presidential memorandum that came out a few weeks ago. And we know that there are certain things we know, and more importantly, things we don't know at this point in time. So let's start with what we know right now.
Yeah, Leslie, at the top, you said we're going to provide clarity. I kind of twinged a little, because I'm not sure we can provide clarity around this right now. But we definitely could talk about the little we know and the lot that we don't know. So,
and I think that's great too, because that is clarity.
So the first, what we know, right? We know this memorandum says that Treasury, the president, wants to look at ways of deferring the employee's share of Social Security tax. So for all of us, we are aware there's the employer's share and the employee share, and each pays 6.2%. With the CARES Act, the employers are able to defer their portion of the 6.2%. What this memo says is employees should get the same deferral on the 6.2%. We know the memo says that Treasury wants that deferral to be between September 1st of this year and December 31st of this year. We also know that the memo says that this deferral should apply to wages less than $4,000, and that's payable biweekly, and you would calculate that on a pre-tax basis. That comes out to about $104,000 a year. So if your employee makes $104,000 or less, they would most likely be eligible for this. This is the most important part, what we know. The memo says Treasury shall issue implementing guidance. And that's what we're really waiting for, because what I just explained to you is all we know at this time. And what else we know at this point in time, it's not a holiday. It is not a holiday. And what do I mean by holiday? That means that it is just deferred. So at some point, it's going to have to be paid back. What I will tell you, what you're seeing in the news media is that the administration is looking at ways to potentially make it a holiday, but that's not where we're at today. Today, it would be just a deferral.
Yeah, so I think that is huge, first of all, the highlight that it's not a holiday, first of all. And I think you and I both know that a way better question to ask, now that you've ran through what we know, is what are the areas that we're awaiting guidance for? Because I think there's a lot of dead bodies out there, and because of what we don't know, areas that could be very tricky with all of this.
Yeah, and you know, we could probably take the remaining time, but I definitely want to give Jack time, because I'm notorious for cutting Jack off, and I don't want to do that again. So what we don't know is, very simply, is this at the election of the employee? Does an employer have to provide it as an option to the employees? How is that all going to work? So is it mandatory that employers have to offer it to the eligible employees? Do the employees have to make the election? So those are some of the nuances. And then we move one step from that. So how is it done? So then once you make the deferral, who's responsible for paying that deferral when it becomes due? Is that going to be due on the 9/41? Is it going to be due on the 10/40? You know, there's been lots of talks back and forth about what the expectation is. Some have said Treasury's looking at making it of 10/40, reporting the deferral on next year, which would be your 2020, 2021 tax return. You would report it on that, and that's where you would true it up. Some are saying, no, it's going to be on the 9/41. And then there's questions on where are you going to report it on the W-2? And what if an employee receives a W-2 and it's not accurate as far as what the deferral was? So there's just a lot of questions. And, you know, really at this point, we don't know. And we have no clue, for example, when the deferral would be due.
Wow, talk about Pandora's box there.
Yeah, exactly.
So when do you think we'll receive technical guidance from Treasury, since they shall issue guidance?
Yeah, I wish I had the crystal ball, right? What I can tell you is what I've heard, and it's all over the board. So, you know, what I'm going to tell you is what I know, but there's definitely, it could change tomorrow. So I had heard last week it was going to be on Friday. And I was waiting for 4 o'clock, 5 o'clock Eastern, because Treasury likes to drop guidance on Fridays around at the end of the day. Nothing. So what I've heard this week is, one of my colleagues told me through their connections, they heard it might be as late as Labor Day. I've also heard it might be next week. So really what I take away from that, Leslie, is we don't know. Now, I will tell you, there's a lot of news articles out there saying the reason that there's this delay in issuing guidance is that the administration is really trying to figure out a way that they may be able to make this a permanent, as we talked about, a holiday. So not just a deferral, but that the tax would be forgiven. So we'll have to wait and see. I wish I had that crystal ball, but hopefully we'll have something here soon.
Well, we really appreciate all of your insights. We will keep you around for questions on both of these topics, as I know they're rolling in as we're talking. And I do want to remind everyone to join Jen and Chastity next week, as they will be doing a much deeper dive in our Unlocking Cash During COVID session next Wednesday on payroll tax credits. So thank you so much, Chastity. And now we will pivot to our latest on the PPP discussion. So welcome back, Jack.
Hey, Leslie, how you doing today?
Awesome. So Jack, there has been a little bit going on in the PPP world. Let's start just with a quick overview of where things stand, and also talk a little bit about the forgiveness process.
Sure. So there really hasn't been a ton of new developments lately, right? The month of July, there was absolutely nothing that came out at all, and we have started to get some guidance coming out in August now. So there was some FAQs that came out specifically on forgiveness on August 4th, and then those were updated with some additional EIDL related guidance on the 11th. And we got a couple normal FAQs that were clarifying costs that came out on August 11th as well. And then there was an interim final rule that came out that really got into the topic of what happens if you get a bad answer from the SBA and your bank. So if you apply for forgiveness and either the bank or the SBA rejects that, what does the process look like? How can you appeal that? And so the IFR that came out was specific to that whole process. How will you go about appealing that? What does it look like? And that type of thing. So that's really the guidance that we've gotten at this point in time, right? So there hasn't been a tremendous amount beyond that, unfortunately.
Well, that's great. So what about in terms of the portals and things for forgiveness? Where do we stand on that?
So, you know, the SBA did come out and talk about opening their portal up on August 10th. There was a lot of speculation that that was not going to happen, but it actually did happen. So right now, the SBA is in a position to accept, reviewed and approved loan forgiveness applications from the banks. Now, the other side of that, though, is a lot of banks still are not accepting applications. And the reason is that there's many banks that don't feel they've got enough rules from the SBA and the clear guidance that they need in order to be able to, discharge their responsibilities to review the loans. And so as a result of that, the banks haven't even started accepting applications. Now, we are aware that some of the community banks that are out there, the smaller ones, are accepting applications and have submitted some through to the SBA. So that process is working. But, until we get further guidance on, one of the main topics that's out there, which is how to file before the end of your covered period. So for those folks that are electing that 24-week covered period, but let's say, use all their money up by week 10 and want to file early, we don't have the body of, guidance that we really need for that. And until that really comes out, I don't think a lot of banks are going to start accepting applications.
Understood. It just feels risky for them.
For sure. Yeah.
Well, let's talk a little bit about payroll costs. I know that that's the bulk of the costs that most people are seeking forgiveness on. So what do we know now with respect to payroll that you think is relevant that people want to know and understand?
Sure. So, one of the FAQs that came out on forgiveness actually gave us some great clarity related to payroll that we didn't have before. So, and that's really valuable for those folks that are looking at using an 8-week covered period in particular. And the guidance was that as long as the amount was paid during your covered period, you can include it. And so, for instance, if your loan was originated on a Wednesday, but you paid payroll on Friday for the preceding 2 weeks, you could include that payroll because it's part of your covered period, even though the time incurred was before the beginning of your covered period. I actually was just responding to an inquiry that came into the live stream box where they were talking about the use of the covered period or the alternative payroll covered period with respect to that. And you do have to make sure that you're looking at the correct periods because you're only going to get to use either the covered period or the alternative payroll covered period for payroll related costs. And you're going to take all your payments made during that period of time plus the accrual at the end. And that's going to be part of your eligible costs. So that was one thing that clarified it. We had thought that was the case, but they actually gave a specific example, and it's crystal clear now.
Mhm.
We also got more clarity that, gross wages for forgiveness reporting is appropriate. So if you pay an employee $1,000 and then you have the withholdings for federal and FICA and everything, it's the $1,000 that's eligible, not the net number that you pay them. We got some clarity around healthcare benefits, that dental and vision are included, which we had suspected before. Also, payments on self-insured plans and other health benefits, as long as they're paid within the next normal cycle. For a while, we thought that they had to be paid during the covered period. And we do still think that income continuation benefits, things like short-term disability, long-term disability, life insurance, we do think that those are still excluded from what constitutes healthcare benefits. There was some clarity around prepayments. We feel like it's pretty clear now that you're not allowed to prepay retirement plan contributions or healthcare premiums, because it talks about you cannot pay things or include things that are the payments from in advance of the period due. And so there's a lot of good guidance that came out there. The only other one that I want to mention relates to payroll costs indirectly in terms of wages and the wage reduction test. And so if you have to apply that test, there was some clarification that came about that says that when you're looking at that, you're going to compare the salary or the hourly wage rate. And so a lot of people were looking at total compensation, which might include, in a restaurant setting, tips, or in a lot of places, some type of incentive compensation that would be tied to sales targets or other things.
So commissions, bonus.
Exactly. So we think that as long as the underlying base compensation has stayed the same, you can say that you didn't reduce comp by more than 25%, even if those commissions might have gone down by more than 25%, because those are incentive comp and not base comp, right? So we think that the guidance clarified that in that it said wage reductions only need to consider salary and hourly wages. So those were some good clarifications that did come out in the FAQs.
Yeah, and a lot of those really were very favorable, I think, for borrowers. So thank you for those updates, because we have a hopping inbox today. And so I think another question on everyone's mind is some of the non-payroll cost items. And I know we've got a few things we've received clarification on related to interest and even some of the utility and transportation items. So what can you tell us about those?
Sure. So the interest thing we got great guidance on, right? So their interest on debt in general is an eligible cost, but there was a lot of questions on whether or not it could be included in the forgiveness calculation, because the forgiveness wording was different than what was an eligible use of proceeds, right? And it clarified that interest on covered mortgage obligations, which are mortgages on personal and real property. A lot of folks were interpreting that as that's your mortgage on your building. You can include that, but nothing else. We did get clarification that the real property piece and the personal property piece is really a broader definition than we had originally interpreted. So things like interest on auto loans or equipment loans are eligible for forgiveness. Now, we also got clear guidance that interest on things like unsecured lines of credit, right? Those are clearly not eligible to be included, in the forgiveness calculation. It is a little unclear, though, on things like, let's just say you've got an asset-backed line of credit, right? That might be secured by both inventory, which would be personal property, or receivables, which is an intangible. Now, what do you do about interest on that, right? So in those cases where that's kind of a gray area, we would obviously recommend that don't include it. Hopefully you can get to 100% forgiveness without including it. But if you did have to include it, then you'd want to just know there's some risk associated with that. You asked about utilities. We have been getting some questions about, just, what constitutes utilities in general. Again, I'll cover that quickly. Electric, water, gas in terms of natural gas, telephone. Generally, we think cell phones would be included in that if the company is contracting for the cell service on behalf of the organization, and internet is included. The one hotly, contested one that's out there is, what is a transportation utility? We did get clarity on that, and that specifically relates to transportation utility fees that are assessed by a state and local government, right? So those would come through potentially on your property tax bill or something like that.
So now, super narrow.
So super narrow in terms of what was in the FAQ. Now, I will tell you that there are some advisors out there that are still saying, because there was an interim final rule that was talking about how individuals might apply for forgiveness, and it actually used an example of business utilities as gas for your personal auto. Now, that's the only time that that's referenced, and we kind of feel like this new guidance supersedes that, but there are some folks that are still saying, well, maybe you can include, gas that you put in your car as part of utilities. Now, again, that's one of those gray areas that we would just as soon recommend you not include that if you can get there, because you can use a longer 24-week period and get there with things that are right down the fairway, like payroll costs or rent or other things. Yep.
That makes sense. So it's good that we've gotten a lot of clarity on areas, and I think it's created so much more certainty, but we do have certain areas that are still unaddressed. And with those areas that are unaddressed, I'm curious what you're recommending to clients at this point.
Yeah, I mean, there's just a ton of minor things out there that we would love clarity on, but there's really kind of two big areas. And we talked about one of them before this, and it really relates to, what if you're using the 24-week period, but you're going to file before the end of that, right? We did get guidance in the regs that talk about how the wage reduction test would be applied, but we don't know a lot of other things, right? So for instance, if, it says for the 24-week period, the $100,000 cap on compensation would be 24/52 of that amount, or roughly 46 grand. Well, what if you're applying 13 weeks into it? Is your cap 25,000, or do you get the full 24-week 46,000 as your cap? Again, we don't know the answer to that. We get a lot of questions on FTE calculations. Well, if I file after 10 weeks or 12 weeks, and then I want to lay off people, let's say 14 weeks later, but that's still in the 24-week, do I run a risk? The answer is right now, yeah, you're running a risk, because your covered period technically is 24 weeks. Now, I don't know how you would report a decrease after you filed your application, but again, it's one of those areas we just don't know the answer to yet. And the other one that came up more recently, with an 8-week period, the chance to greatly exceed spending your loan amount in excess of your loan amount was pretty small. But now that you've got a 24-week period, that's 3 times the period that the loan was sized for, right? So you could see that if you might have $1 million loan, and then over that 24-week period, maybe now you have $2 million of qualifying eligible expenses. So the question is, can you start at that $2 million number and do your reductions from that so you can get to 100% forgiveness? Or are you limited to your $1 million loan amount as your eligible costs? We never really thought about that in the 8-week context, because the likely differential between those was going to be pretty small, but now it could be, fairly dramatic. And so again, having guidance on something like that would be very helpful. And the second topic really relates back to the question about, did you use the proceeds, and is the thing you're requesting forgiveness for, were they used to retain employees, right? And nobody knows how the SBA is going to apply that guidance right now. So it's really important that we let things play out there a little bit. And this gets back to kind of your question about what are we recommending to clients. I would recommend people that if you don't have a burning need to file for forgiveness, particularly if you're using the 24-week period, hold off on filing. Let's wait till we get some more guidance. If you do have to file, stay away from those gray areas, include the costs that are going to be there, and then make sure you're using those, so you don't get surprises. And the only other thing I would say is from a merger and acquisition perspective, we are seeing a lot of questions come up related to merger and acquisition activity. A lot of people are tired through this whole COVID crisis and don't want to go through a rebuilding process again. And so they're looking to sell their businesses. Having a PPP loan on your books introduces some complexity into that, because a change in control in most cases causes you to be in default of your loan agreement, even if you're just selling assets. And so, might be something that you want to get the SBA or your bank involved with early. Clearly read your debt agreement to make sure you understand what's going on there. So, Chastity, I think you might have had something you wanted to comment on.
No. I just wanted to agree with everything you were saying, Jack. So I was just kind of nodding my head.
All right, I saw your hand go up on our internal screen, so I was thinking.
I was getting excited because I'm like, yeah, exactly. The M&A thing is a big deal.
It's a very big deal.
See more and more of that.
Well, I think Jack, Chastity, both of you had wonderful insights today. And unfortunately, that's all the time that we've got for today. So what I do know is that we've had a ton of questions come in through our inbox today, and we'll be able to cover a lot more of these payroll tax matters in next week's Unlocking Cash with COVID session that we're going to be doing next Wednesday. And also we'll be following up with some of the specific questions that we've got in our live stream inbox, as well as with our next live stream session next Thursday. So we just encourage everybody to please continue to send your questions to our inbox, and we'll continue to cover what we can during our time together. And we would also invite you to join us during our Unlocking Cash with COVID-19 series starting next week. As a reminder, that session won't be a YouTube series, so we're reminding everyone who's interested in that to register using the links on our homepage at claconnect.com. And we will be taking opportunities to find tax savings for you and increased cash flow. So until then, we will wait to see you next Thursday for any additional updates. But until then, stay safe and healthy and have a wonderful afternoon. Thank you.
Thanks, Leslie.